Hi there traders, this is Steve Miley, Market Chartist on behalf of forextraders.com, and today we're going to be taking a look at the Australian dollar versus the US dollar and also the New Zealand dollar versus the US dollar, the Antipodean pairs. These are risk currencies, do better when we're in a risk scenario, a risk on scenario, when investors, traders are willing to take more risk, and we've certainly seen an improvement in that backdrop in here in the early part of 2019. We did get that flash crash down here at the very start of the year during a very illiquid part of the Asian session. So we had that flash crash driven primarily by Apple giving some fairly negative forward guidance for Q1. So we saw that flash crash, but the market came back very quickly after that flash crash and then really saw a really strong rally in here in early January 2 weeks ago, and then last week continuing the push higher. Importantly, taking out this 71.49 level, that was enough to shift the intermediate term outlook from neutral to more bullish. Through 77 was enough to shift us to neutral, up through 71.49 now to a more bullish tone in here. We also reversed up through that downtrend line. So the flash crash kind of flushing out and the flash crash sell off and rebound flushing out some stale shorts in here and some profit taking going on, and the market certainly flipped to more bullish in here and a push higher right into the end of last week, leaving upside pressures maybe as high as back up to 73.94 up here and 75.00 into the second half of January. Similar technical story in here for New Zealand dollar. Smaller flash crash in here at the beginning of the year, strong recovery effort, reversed up through the downtrend line through this important peak at 67.90 last week for an intermediate term bullish shift. And also this is being supported by fundamentals in here. A weaker US dollar generally across the board, with FOMC members including Fed Chairman Jerome Powell becoming more dovish in the very early part, well actually from late 2018, but certainly throughout 2019, a more dovish tone which is negative for the US dollar. So we're seeing the US dollar weakening, and also trade concerns, the trade war on a truce at the moment, but obviously the trade negotiations we have going on between the US and China seeming to go fairly well, and that's pretty positive for risk assets and risk currencies being the Australian dollar and New Zealand dollar. So further upside expected here also for the New Zealand dollar alongside the Australian dollar. This has been Steve Miley, Market Chartist for forextraders.com, and I wish you a great trading week.